It's important to note, if you look at the four biggest companies in the S&P 500 on a market cap basis, Apple, Microsoft, Amazon, and Alphabet, those four stocks, which control, by the way, a lot of ETFs, are down 3.5%, 4%, 8%, and 6%, respectively. I think you've coined the term, sell them if you've got them. Yep. This is what's happening right now because, bizarrely, four S&P sectors are higher right now.
This is the attempt broadly to sort of take down the high beta, high PE kind of stocks. But more broadly, it's the market is telling you again that the two things they care about most is China slowing / tariffs. And we got word in the middle of the day that, not surprisingly, the president was saying if this doesn't work out, or word is leaking out, if this doesn't work out, the talks with President Xi will just have more tariffs. Nobody would be surprised that this is a standard negotiating tactic, yet the market drooped on that. The other story, of course, is what's going on with interest rates in the Fed. Let me just show you the industrial stocks. Remember, all of the aerospace stocks were weaker on the Boeing news and what happened with the plane crash there. But the 2:15 or so is when we came out with the talks about President Xi and the tariffs would be added if the talks didn't go well. And you can see industrials all droop. So your bigger names outside of the aerospace group, your Textrons and Deere and United Technologies, all those stocks, all the big global industrials just drooped on that news. Then, of course, we had the FANG story. You heard from Bertha talking about that, all of that stock. And you can do this at the NYSE. We have a FANG index down here. And you notice, Brian, that was lower earlier. There had been talks over the weekend or discussions over the weekend about this new tech tax going on over in the UK. And I think that weighed on them because Amazon drooped very, very quickly after the open, long before this word on these tariffs happened. So broader, what's happening today, you mentioned some stocks that were up, some sectors that were up. What's happening here is, once again, value is outperforming growth. So you're getting your consumer staples names that are doing better today. You're getting banks that are doing better. Those are all value names. Energy is one of the value groups that aren't doing particularly better. But there you see growth down 1.7, value up 0.15, and that's, again, a lot of consumer staples names and a few smattering of retail names that are also beaten up this quarter that are doing a little bit better today.
But, Bob, it's interesting because Google doesn't do business in China. So we talk about the sell-off being caused by trade and tariff concerns. It's hard to link up Google or Alphabet with the tariff story. It's hard to link up Amazon with the trade and tariff story when they have Alibaba. It's just difficult to make that connection.
That particular story is about the global growth story, the Google part of that. So again, you're taking down the high PE ratio country stocks because of the global growth slowing story. Now, nobody knows exactly how big the global growth story slowing really is, or how significant it is. If there is a significant breakthrough on the tariff discussions, you're going to see a lot of these stocks turn around. Alibaba did the same thing today. But absent that, the global growth slowdown story is clearly affecting the earnings situation. So I'll give you an example. 2019 earnings estimates are not really dropping. They're still going to be up about 10%. But the market is acting like they don't believe those numbers. The market's acting like they think it's going to be 5% or possibly even flattish. We're not in the earnings recession story, but that's the way the market's acting.